Now, if you're invested in YieldMax weekly income ETFs, you've likely noticed a big shift. ULTY is now one of the most popular weekly income ETFs on the market. Not only has it been paying high distributions, somewhere between 70 and 85%, but it's also surpassed $2 billion assets under management, which is absolutely insane. And with all the popularity going around, it's no wonder that ULTY has been scaling faster than nearly any other YieldMax fund out there. And as a weekly paying ETF, we can see that it has one of the highest distributions rate compared to any other YieldMax ETF out there. The second highest weekly paying YieldMax ETF would be LFGY, the crypto industry and tech portfolio option income ETF, which has a distribution rate of around 60%. So it's no wonder that ULTY is one of the most popular ETFs on the market right now, because it's paying around 85%, which is absolutely insane, and a lot of people are making a ton of money with this ETF. So it's pretty safe to say that ULTY has taken the throne from MSTY, which currently has a distribution rate of below 80%, which is very unusual for MSTY, which has previously seen rates above 100%. On top of that, this ETF pays out every single month. So for people who love weekly paying ETFs, a lot of people are switching to ULTY. And especially with the latest distributions, ULTY has that 85% yield versus MSTY, which has a 75% yield, paying out only $1.18 per share, which is the lowest distribution that we've seen so far. So it's very safe to say that MSTY is under pressure, and MSTY is built on volatility of MicroStrategy MSTR stock, which has seen a decrease in its implied volatility, giving out lower yields for MSTY because it sells covered calls as well as credit spreads to generate income. And one thing that a lot of investors are happy about is that ULTY actually switched from synthetics to actually holding the underlying stocks, which is becoming more and more popular as of lately, versus MSTY, which has synthetic covered calls, doesn't actually own any MSTR shares. So we're really seeing a shift in the market and what investors are looking for in an income-focused ETF. Now currently, MSTY is sitting at a price point of below $20 as of July 31st. And while this may seem like a low point, it does have only down 4% all time, as this was a $20 fund when it first released in 2024. Now I believe that because we're at such a low price point, as well as implied volatility being very low, we can take a look at MSTR's volatility structure. The IV rank is 4%, as well as an IV percentile of 9%. And if you're not familiar with implied volatility rank, IV rank, it is basically a measurement used when trading options and reports how the current level of implied volatility in a given underlying compares to the last 52 weeks of historical data. And in this example, we can see that a low IV rank is going to be 30% or less. And as you can see with MSTR, IV rank is at 4%, absolutely low. And that is why we're seeing very low distributions from MSTY, $1.18, the lowest in its history. Now, while people may seem like this is going down and down, $1.18 on a $20, sub $20 ETF is still a very good yield. As we mentioned earlier, it's around a 75% yield, and many people are very happy to take that type of income. Now, with that low IV rank, there is a huge chance of volatility rebounding, and in turn, option premiums would rise again, boosting MSTY payouts, as well as share price appreciation. We can see previously it's had these pretty big kangaroo jumps going from all the way to $40 per share, back down to $20, and then $40 again. And now we're sitting at a pretty stable around $20 per share price point. not much volatility, especially with the share price of MSTY and MSTR. This is going to make MSTY's current low income environment potentially attractive if you're very patient enough to wait for a volatility recovery and you believe MSTR will resume trading behavior that supports high option income. But until that time comes, current income-seeking investors are turning towards ULTY, and for good reason. It's been very consistent. It's been paying out between 8 to 9 to 10 cents per share every single week since March. So we can see that these payments are very consistent, and that's really what you want to see as an income-focused investor. It is much easier to estimate your potential income versus something like MSTY, where it's jumping all over the place. You can't really estimate your yearly income as well. And on top of that, investors are switching to ULTY because they're getting that steady cash flow, and ULTY is winning in consistency as well as volume. You're going to have a tighter bid-ask spread with a higher volume, as well as the diversification potential as it holds 15 to 30 high implied volatility stocks. So you know you're always going to have high implied volatility because they can switch out some of these stocks that they're holding if it has a drop in implied volatility. Because remember, the income is generated from the option premiums, which are in turn generated from the implied volatility. So they're constantly switching in and out stocks, different stocks. And on top of that, you actually own some MSTR. So if you are bullish on MicroStrategy, you do have exposure to that company in ULTY, which is very nice to see. And it does make sense for a lot of people to own both MSTY and ULTY. Now, while we haven't seen much movement with MSTY in the past few months, we can see it's really stayed around this $300, $400 price point. MSTR may see a move up in the future, and in turn MSTY may still bounce back, but we're waiting on that volatility. I do believe that now is a good buying opportunity because MSTR's IV rank is now 4% historically low, and it should be taken as a contrarian signal, because as volatility returns, and if you do believe it will return, MSTY's income can rebound very quickly. So if you're willing to wait, MSTY is a great investment opportunity, especially getting it under this $20 price point. But until then, MSTY's income is subdued. You're going to see lower payments because it has low IV, and the NAV is going to be subject to those stock declines as well. We can see it's been dropping for the past few months now. And the whole reason this ETF was popular in the first place was because it had yields upwards of 100%, which made it very attractive and one of the highest yielding YieldMax ETFs on the market. So it's not as popular because it doesn't have that ridiculous 100% yield, but it may return in the future as volatility comes back. But in the meantime, it's not a bad idea to own ULTY as you are getting that exposure to MicroStrategy. As we mentioned earlier, it holds MicroStrategy. And having a portfolio combination of ULTY and MSTY is a very safe bet as well. So let me know down in the comments, are you choosing ULTY over MSTY, or are you invested in both of these ETFs? ULTY is more consistent, and MSTY is going to give you that higher income potential, maybe in the future if volatility comes back.